Hey guys, welcome back to Evolve or Die. Today's video, we're going to be talking about my perception of the retail investor phenomenon that we've seen. I'm sure a lot of you have seen retail investors getting ragged on in the news and in the media, people saying that most retail investors are amateurs. We don't know what we're doing. We just trade meme stocks. I'm sure you've heard a lot about the GameStop and AMC mania. So I'm just going to shed a little bit of light on the transition of the concentration of wealth that we're seeing because of the influx of retail investors and the effects that that's having on the markets for hedge funds and for us. And just a bit of background. A lot of people, most people don't invest. Most people don't even know where to begin looking for information. Most people are not excited about commission fees, paying a broker to make these trades for you. So one of the reasons that we've seen retail investors numbers triple since 2019, a lot of people believe there is this massive influx of retail investors because of the pandemic, the government sending out stimulus money, which I'm sure played a factor in the influx. But, you know, people had a lot more time on their hands. But the biggest reason, in my opinion, that we've seen such a massive wave of investors in the retail sector is because previously, there wasn't such a real-time access to data. There wasn't access to all of the data that the analysts have when they're crunching numbers for the hedge funds and for the asset management firms that they use. These institutions kept their information very, very concentrated. And what we've seen throughout the last few years and few months regarding the influx of retail investors, I'm sure many of you have probably heard of the Reddit revolt, the Wall Street bets, and the other retail investors that have begun to use social media as a way of crowdsourcing large quantities of data in real time. So when you hear people talking about how retail investors we're dumb, we're the dumb money, they call us, they try to paint this picture of a bunch of people just flooding the market and they don't know what they're doing. This is not collectively the case at all. What we've seen through financial sectors of social media, we've seen very highly motivated individuals from all around the world crowdsourcing data through these social media platforms. You can scroll through Twitter. People will be uploading research analyst documents. They will be uploading SEC filings. They will be uploading volume movement. They will be uploading order flows from institutions, from retail investors. What we've created here is a very organized, highly strategic crowdsourcing of information. So part of the influx that's happened is because we have figured out how to crowdsource data, just like the hedge funds and the asset management firms do. They have researchers, hundreds of researchers and analysts working pretty much around the clock to crunch numbers from all different sectors and all different aspects. So you have a room full of analysts, or I'm sorry, a building full of analysts, and everyone is collecting different data. You might have some of the analysts that are collecting data about what legislation is going on, you know, public sentiment. We have other researchers simply focused on institutional buy-ins. We have researchers simply focused on researching competitors of companies in the same sector. So what we've done as retail investors is essentially we're mimicking the structure that have made the hedge funds so successful. And the thing that has made hedge funds and asset management firms so successful is the access to data. That's really that's the key distinction between what we're doing and what they're doing. We didn't have access to the data, but now, in real time, you will see uploads from the Bloomberg terminals. We'll see uploads from the Business Insiders, Hindenburg Research. We have figured out a highly efficient way to disseminate information and data in real time through all of the social media platforms. And this is directly forcing a transfer of wealth from within the corporation's hands to that of retail investors. We have essentially discovered ways to manipulate the market in the same way that hedge funds do. The GameStop and AMC phenomenons that we've seen are direct retaliation of hedge funds that short stocks. When companies short a stock, they're essentially making a bet on a company or a stock that is going to decline in price. And so when analysts are shorting the stock, when the institutions are shorting the stocks, they will have research firms that they pay to release data to cause fear, uncertainty, and doubt. And that fear, uncertainty, and doubt often is successful in tanking the markets and tanking the stock. So their shorted positions make them millions of dollars. So essentially what retail investors did was drive a massive influx of volume into heavily shorted stocks like GameStop and AMC that are, that are heavily shorted. So it was a direct retaliation. We're using their methods against them. The hedge funds and the research firms and the analysts, they correspond very closely and very strategically. They collaborate to manipulate the markets. And now that retail investors have figured out how to mimic exactly the moves that they make, we're playing their chess game now. They are calling us dumb money, and we're seeing brokerage platforms suspending our trading because of the volatility. And it's all very interesting. And I'm really excited to be a part of it because for so long, people were not able to make informed decisions about investing. We weren't able to have access to zero commissions tradings like we do through Robinhood. So I'm really excited to be a part of this because you'll hear in the news that, retail investors, we shouldn't be allowed to be doing this. We shouldn't be able to sway markets in this way. But this is what large hedge funds have been doing since the market was created in 1792. Up until very recently, the wealth in the stock market has been so concentrated, and that valuable information that we talked about just a few moments ago, it was withheld. I couldn't just look up the Bloomberg terminals. I couldn't sign up for a subscription to Business Insider to have up to the minute real-time data about companies. So the information was heavily regulated, withheld from everyone, but a small few, the hedge funds. And what we've managed to do using social media, like I said, is sending massive influxes of volume into the market to affect the stocks that hedge funds are targeting to short. Because when they short stocks successfully, we're the ones that come out on the losing end. We lose money while they make billions, and their investors that they're trading for make billions. But we are on the losing end of it. So now that we have retaliated, and now that we have basically reciprocated the methods that they are using to manipulate the markets, it's all of a sudden, it's just a big no-no. But essentially, this has all been enabled by brokerage firms like Robinhood and Webull, who have eliminated so many of the barriers that previously prohibited or deterred people from investing. By allowing free commission trades, that is simply where you don't have to pay a broker to place a trade for you. By allowing free commission trades, the barriers that have shielded and protected Wall Street, such as high transactional trading fees, needing to go through a traditional brokerage firm, and leaving the trading to the brokers, and people just having a general lack of information regarding even knowing where to start, where to funneling money, or being eliminated and having, paved the way for these influxes of people who have never invested before. So that being said, the corporations have started the corporations and the hedge funds have started retaliating against us. For instance, the public has figured out how the stock market game works and how to sway the market on a massive scale. So we saw during the GameStop phenomenon that many people were lobbying Congress, and they started lobbying brokerage firms to essentially prohibit the influx of retail investors that were flooding the market. So they're going to retaliate against us, and we just have to be ready for the tricks, because the market is constantly evolving. What we've created is an entirely new market mechanism through retail trading and short squeezes, and we've really done something incredible here. And like I said, we've done something really incredible with being able to crowdsource information, coming together as this massive global band of analysts. Like, we're not idiots. Like, this is a highly organized and highly strategic approach that is being taken in retaliation to the markets. So that being said, guys, they're going to take measures to try to stop us. They're going to take measures to try to force us out of certain stock plays. And we are mimicking their methods and developing our own methods and strategies to ensure that we come out on top, to ensure that we are the ones that end up winning. So with that being said, I just kind of wanted to shed a little bit of light on my take on the retail investor phenomenon, because it really is a phenomenon. And all of those that are saying they're going to be able to flood us out and they're going to be able to box us out of the markets, they're just sadly mistaken. Because like I said, this is highly organized, strategic steps that are being taken to make sure that we're also profiting. And the hedge funds, I think, are going to come to realize soon that we're here to stay. So guys, that pretty much sums up my theories on why there's been such a massive influx of retail investors, because again, we now have access to so much data, and it's literally at the tip of our fingers. It's a click away. In seconds, I can find out any real-time data, any real-time news that I want to regarding any company that I'm interested in. It's really going to change the structure and the functioning of the stock market, because it's not just a Wall Street game anymore. It's for everyone. It's for everyone that wants to do research and be a part of the retail investor movement. So it's really exciting. I'm so excited that I started investing when I did. And yeah, guys, that's pretty much it. If you guys found anything useful or liked the video, just go ahead and hit that like button down below, click subscribe, and hit the notification bell for more uploads and access to them as soon as I upload them. So we also have our book of the week, and this week our book of the week is 48 Laws of Power by Robert Greene. It is an amazing read about a very instructive 3,000 years of history and power, all fused into 48 laws that you can study and analyze and use to change your line of thinking and how you approach different things, how you interact with certain people. It is an amazing book. It's phenomenal. I recommend it to everyone. It's a great book. So if you guys want to check this out, I'll leave a link to it down below in Amazon. Again, that's 48 Laws of Power. It is a national bestseller, and there is a follow-up book called The Art of the Seduction. And yeah, like I said, I'll leave a link for that down below, guys. And thanks for tuning in. Until next time, guys.